Hey there, I'm Brent Lancaster. Really excited about this episode of the Roundtable. We had Ryan LaRussa, Doug Bickley, both lenders at GMFS Mortgage, come in not only to talk about the mortgage market, not only talk about the conversation to have between lenders and agents, but I really wanted to talk about their business. These are two guys that really understand relationships. They really understand business building. And lenders really have kind of the same challenge that a lot of real estate agents do in terms of trying to stay top of mind, trying to build your business, and constantly going out there. So we had a really cool conversation about how they built their business, how they maintain their business. And one of the things that I like is they're best friends, but they're two totally different personalities. So they go about it two different ways. So it was really fun to do, really excited, and I hope you enjoy it. Welcome. We're here with Ryan LaRussa. We're here with Doug Bickley just to kind of give a conversation here at the Roundtable. And basically what we're trying to do is just, laid back. I want to have a conversation. I've always been curious. Of course, we're friends and we hang out both professionally and personally. But what I'm curious about, just sort of, and a lot of things, I know Doug and I have been through this conversation, but I'm curious, Ryan, with you, is just how did you get started in this business? Like, how did it all come about? I love the origin story.
Yeah, it's pretty interesting deal. So back in 2000, I got a phone call from a really good buddy of mine. He said, "Hey man, why don't you? We got this really cool company in Baton Rouge. It's kind of a startup. But why don't you come get in?" I was like, "Okay, well, what is it?" And he's like, "It's the mortgage business." Well, back in 2000 and 2001, that was a time where I was at Southeastern, but everybody in my age group was like, I'm going into pharmaceutical sales, right? So that was kind of the big deal. And at that point in time, I thought that's where I would wind up, honestly. And with a marketing background, finance background as well. So you know what, I'm going to go do that. But I'll never forget, September 11th, 2001, I'm driving down Burbank, and I actually had an interview that day with Homeowners Loan. At 1 o'clock, and that, if you don't remember, which I know a lot of people do, that was a bad day in history. But anyway, September 11th happened. I actually wound up at 1 o'clock at Homeowners Loan. I think at about 1:30, they asked me to come on board and hire me, and I couldn't even spell a mortgage.
Wow.
So that was kind of my junction. Got in, learned a lot. They had crash course training, and for 3 weeks you did not get on the phone. All you did was train. And that was probably the catalyst that put me in the mortgage business, because it was 3 weeks in, you learned all that you could, and then they would let you loose. And then they would have another training course. But I learned a lot, and that's kind of my crash course of getting in the mortgage business.
During that 3 week period, what did you, you learned the mortgage business?
I learned the mortgage business. I learned at that point in time that it was a heavy subprime market. It was a subprime company. I really didn't know much about the conventional aspect. But what I did learn is how to engage with people. And at that point in time, there was a lot of cash out refinances that were going on, a lot of debt consolidation, being able to kind of take some debt and say, hey, you know what, you're paying this 18, 20, 25% on these credit cards. Have you ever thought about kind of consolidating that, saving some monthly amounts, and then moving forward to move you onto a different spot in your life? So that was kind of what we learned. We didn't really do a lot of purchases back then. I know purchases were being done, but to be honest with you, I was kind of scared of a purchase. Didn't really understand it.
Until now.
Yeah.
Well, I've heard your story, so let's go ahead and get yours too.
Well, I just wanted to kind of ad-lib on what you said about the refi, cash out, and debt consolidations. And I know we're kind of long gone from the subprime market, but I mean, do you think over the last 10 years, the housing market has just kept going up and up and up,
Sure.
With great growth? You think I feel like we are, getting back to that. I know that I'm having a lot of customers call now to refinance, cash out, to whether it's consolidate some debt, whether it's to get cash to send somebody to college.
Yep.
I spoke to a customer yesterday that's been a client of ours for a long time, and he cashed out for actually paying his son's student loans off.
There you go.
Yeah.
So you think that's kind of coming? I feel like we're back in that.
I do. It was interesting that if you go back and look at time, and 1 year ago, refinances which is crazy as this sounds, we're down about 30%.
Really?
Right now, this morning, I was on a conference call just a little bit ago. Refinance is only down about 6%, because if you look at where rates are today compared to where they were a year ago, we're about even.
Okay.
And so, much like Doug's story, I had a client that I did last month to where we removed his mortgage insurance. Now, when he came to me, he was like a 660, 670, so not that strong. Now his score's over a 770, okay? And we lowered his PMI by $300 a month, so it's a $300 instant savings, but he bought in Slidell several years ago. Well, what's happened? The appreciation's happened, and so you have a lot of that going on. Just looking at the national average and even here locally, appreciation's been 4 to 6% over the last 3 to 5 years. So you do that math and how much wealth you can build for yourself. So somebody can get into that house today with a small amount down. Yeah, they pay a little mortgage insurance, but then we can go back and do a refinance and get that go away, or do like Doug's talking about, a cash out refinance to help change somebody's situation.
So why was it down 30% a year ago? Rates?
Rates. Yeah. So rates, if you go back and you really kind of think about, man, it was doom and gloom.
Yeah.
You know, rates are going up. Guess what? They'll be over 5% by the end of 2018. Those are the type of the conversations. So you had a lot of consumer fear, and then you also had rates that were up, comparatively speaking. Rates are back down. It's an unbelievable market right now that we're seeing.
Yeah, people always buy houses.
Yeah.
People are always going to buy houses, even in the crash of 8, 9, when we were kind of heavy on the refinance and on the subprime mortgages. We were right out of college. We really didn't know what was going on. I got in a couple years after Ryan because of Ryan. And, so we didn't really understand the purchase market. But in studying it and talking to people were still buying homes even through that downtime and down economy. The part that was affected the most, foreclosures were way up, but was the subprime mortgage industry and really the not good mortgages that were written.
Is that when y'all got out of the subprime world and into the more residential world, or how did that transition happen?
Yeah, that was kind of a trial by fire, I think. I think at that particular point, we kind of bounced around. We were really our own independent lender that Toby Arsenault had kind of branched away, and so we would broker our loans through different companies, and he had a business partner at the time, and thankful for the relationship he had with Terrell Brown, who was one of the original, T's daddy, one of the original co-founders of GMFS, and I made a phone call to them and said, hey, we've got some guys that know how to build relationships and service clients and lend some money, but we don't have any money to lend, and at that time, GMFS had some money to lend and wanted to kind of grow and expand their retail side. They had 4 or 5 good qualified loan officers there and wanted to add to that. So, fortunately, we kind of all got in there together and we're trying to figure it out. And then 2010, the rates started, going down, and the refi business picked up, and then it was just a natural progression, I think, to kind of go into the purchasing. I think we probably were going to some conferences, some mortgage conferences that they would have in Las Vegas, and talking about where things were heading, where they were going, and it was towards the purchasing. And I think we kind of made a decision like, let's see if we can go after and try to service the real estate agents and service the buyers instead of just the refinance, and he just made a comment about refinances being up. So we were talking about people are going to buy houses no matter what. It kind of slows down when the rates go down, and some people take a step back and I think about it, start to kind of think about it a little bit. But then once they can realize that the increase in rate doesn't affect the monthly payment as much as the negativity about the rate, right? But it just halts the refi business for a certain amount of time.
Right.
When the rates go up, it's like, I'm not refinancing. The rates are going up, even if it's not way worse than what you have.
Yeah.
But to the flip side of what Ryan just said, as soon as they start down, everybody wants to jump up on it, because there's a lot of people that are thinking, man, I missed out on my last refi opportunity. So those people are like,
I think you're right.
Let me jump in there and make that happen. And so I actually read an article yesterday that new homeownership is up, like, I think it was 1.5%. So if it was 60%, it's up to 61.5% home ownership year to date, which is great. Ryan always says that we don't get the good news and the good information all the time, or the good statistics, because that's not what sells. He says that all the time, and I believe it. So when I find a good one, I try to.
Yeah, absolutely. The negative news sells. Positive news
does. Yeah, it does. So I want to focus a little bit on y'all's business and the business growth, and I think that's kind of where a lot of people, both from the lending standpoint and from a real estate standpoint, and I've really enjoyed watching the both of you kind of run your team and run your business. So I guess the question is, how does it work? Like, how do you approach kind of these relationships? I mean, let's be honest. The real estate business, the mortgage business is a relationship business. And I'm curious from your side. I know that y'all been successful. I know y'all don't want to say that, but what do you attribute a lot of that success to? How do you build those relationships?
Go ahead.
Well, I think there's two different approaches, and so our business styles and models, even though our relationship, Doug and I have been, together for 10, 11 years old, his business model, he was kind of the catalyst that started that, and is amazing at being able to build relationships and actually, understand that if he goes in there and builds a relationship, if we're just all focused, and we just talked about it, on rate and closing costs, we will never win. And so what he was able to do is build some amazing relationships, and then has a great team around him that I know he gives all the credit to his team, which I do as well, because there's a certain thing that people like, and what we both understood is that people like to be part of a team, right? And so when you can talk to somebody and say, you know what, if I'm in a meeting, or if I'm meeting with a builder, if I'm meeting with a real estate agent, guess what? I'm going to get back to that person, but more importantly, somebody on my team is going to touch that person, because we're in that instant age to where we want it now. We want everything now. It's a drive-through world. You know what? If you're not here, we're going to the next person. And unfortunately, sometimes people get bad service and give our industry a bad rap. So what we've tried to both do is develop a great team around us to where if you can't get me, or if you can't get Doug, ultimately you'll get somebody on that team, and that's what people want in today's world. And again, going back to the relationship thing, there's nothing better than building a relationship, not just on the business side, but then also on the personal side, and understanding kind of what makes them tick. What we do both know is that we're not going to be able to do business with everybody, because there's different personality traits. What our common theme and common goal is, hey, look, if we can help enough people get what they want, then we all win. It's kind of what we look for.
Yeah, I think what he said. I think we've been together forever, and we grew up, and we actually had this conversation the other day. We were coming back from fishing, and so we grew up on teams together forever, from t-ball to coach's pitch to baseball, football, basketball. We played. We were always involved in that. And we loved that. We loved that locker room mentality, that hanging out with the guys, doing things together, moving in unison. And I think it fit well. And I know that I speak 100% for Ryan when I say, there's two parts to it. And there's the referral source, which is the real estate agent, the banker, the builder, the developer, whoever that referral partner may be. And there's the client, which is the first-time home buyer, the second-time home buyer, maybe the guy buying an investment property. And I think we perfected servicing the client first, which is what I think the refinance business really taught us, was how to build that rapport and that relationship with the customer, how to separate ourselves from every other mortgage person that there was, which means, making a friend, gaining their trust, and then taking them through a super stressful process, right?
Yeah.
And then we loved the team concept so much that, and we would have these conversations of, the real estate agents or the referral partner, mainly real estate agents, which is where the bulk of our business comes from. We're all on this team together.
Right, yeah.
If we can figure out a way to make it to where the real estate agent knows, first of all, that, hey, we have their back, even when they're not looking, not around, or not overly involved with the process, and that we are going to handle the financial part to where they know when that customer is sent to us that it's handled and taken care of, and they can focus on doing the inspections, the super stressful stuff. and going out and trying to find another buyer or another listing for them. I think once we figured that we could all work together and do that, it really worked out great. And then, I think us appreciating what they do for a living, knowing how stressful it is to be a real estate agent, knowing that those guys are busting it on Saturday, busting on Sunday, and being available to those guys on Saturday and Sundays when they have questions or something like that.
Yeah.
I think that, I think it just worked, and it's fun.
Yeah.
That's interesting. A couple of points that something you said and something you said, but you talked about putting the client first, and that's a very generic statement.
Mm-hmm.
What goes into that? Like, what does that mean? How do you put the client first? Everybody says it, and it sounds easy, but if it was easy, then everybody would do it.
Right.
So when you when a client comes in and you focus on that service piece, what does all that entail?
Well, I think that you just said it. When the client comes in, I mean, I know that's his goal. I know that's my goal. I know that's Clayton and Laney's goal. I know that's Adam's goal. Is to get the client in the office face to face. I mean, we all have the latest and greatest technology.
Yeah.
I can push a button on my phone, and you can have a link to an application that you can fill out. I can never see you. I could really never talk to you. We could close the loan for you in 20 working days.
Yeah.
I mean, we can.
Yeah.
But we try to make a point to get every single customer in our office to show them that we care.
Yeah.
I mean, we block off that hour to go sit, and if it goes longer than an hour, it goes longer than an hour. But to sit and go through the paperwork, because it can be overwhelming, it can be stressful, and there can be it helps with the trust factor. So I think when it comes to saying, hey, we put the client first, like, we're not just looking to put that check in the box, take the application, send a pre-approval letter out, and say, hey, let's go get another one. We want to sit down and build that. That's something Ryan taught me when I first got in. Like, I'm not just doing this to do one loan for him. I'm doing this to do. I want to do your loan today. I want to do your second home. I want to do when you sell and do your third home. I want to be here for when you downsize. I want to do your child's first home. And I think that's something that we pride ourselves in.
Absolutely.
So getting them face to face is really kind of the key. Let me ask you this, and I'd say this a lot, but when you look at the data, every single generation prefers face to face communication. I know that like the millennials get a rap for all their bad rap for all their technology, but still face to face communication is going to be the most impactful. So from that standpoint, do you have any problems getting them in your office?
Not really. At the end of the day, I think if we were all open and honest, we're all fearful, because what we've heard is only if this is your first time or even it's your second time, third time, it doesn't matter, investment property, what you did a year ago, 2 years ago, 5 years ago in our business, because it changes so much, is not going to be the same. So the type of loan that your aunt got, your uncle got, your father got, it's not the same loan that you're going to get.
Yeah.
So what Doug and I both try to do is, let's sit down. Let's talk about some of your goals, some of your fears, some of the things that we can help manage through. Because if we understand some of the pitfalls and hurdles that you don't like, nobody likes surprises. Everybody likes to kind of know the process. And so even though people may have heard the process, it's different. It changes. So we try to sit down and go through that, talk about, hey, what are some of the things that if we can accomplish 85, 90% of those goals, would that really eliminate 100% of the fears that you have? And most of the time that answer is yes.
Yeah.
So it's kind of a fact-finding situation. We can do a lot of that over the phone, but I know for Doug's team as well as my team, when we can sit down and go through everything, talk about the process, talk about, hey, the area that you're looking for, the payment range that you're looking for, because there's nothing worse than you go out there, you get all pumped up, or you go online and you think that the number's one thing and the taxes are wrong, the insurance are wrong, the mortgage insurance is wrong, and you just get kind of thrown off.
Yeah.
And then you kind of go like, you know what, maybe it's not the right time. And then you go and do what you were doing, which is paying that $1,100, $1,200, $1,300 a month in rent for the next year. And then you just wasted another $12,000, $13,000, $14,000. So we try to sit down and eliminate that fear. And 30 minutes to an hour typically is plenty enough time. We come in early, we stay through lunch, we stay late, whatever it takes to get it done. That's what we're going to do.
That's awesome. So going back to something you said, switching gears just a bit, you said we made a goal, or we knew that we couldn't get everybody.
Yeah.
And I think that's one of the fears that a lot of agents have, is they want everybody, and a lot of their marketing, a lot of their advertising, they want to get to the masses. Mm-hmm. So how do you decide on who the specifics are? Like, do you? I don't know if you've ever thought about it, but do y'all have a process? I mean, I know that of course we would like to get everybody,
Right.
But do you have a typical customer? Do you have a typical process in order to bring business in?
I'll let you go with that.
Well, we've always had the motto that we'll work anything.
Yeah.
We've never been one that was after just the low hanging fruit.
Yeah.
So we can write a loan down to $60,000, and we can write them up, over $1 million, and so our team will work any loan that comes down the pipe.
Yeah.
Okay, we don't want to limit ourselves to just one or be in one certain group with that, and every person gets the same treatment.
Yeah.
Every person gets touched the same. Every person gets the same amount of time spent with them, and we feel like that's really, really important. And I think from a referral partner standpoint, I know that we've tried to, we work with the agents, and we work with people that have the same goals and dreams
Right.
that we do, that have the same vision that we have, that have the same character that we have, that want to do it for the right reasons, and care a lot about the client in the process. And that's seemed to be a huge win for both he and I. It's just something that's, and it makes it a ton of fun. I mean, it's a ton of fun when you're all working together in the unison to do what's best for the client. And a transaction that, we all know there is a lot that takes place in 30 days of a purchase transaction. There's a ton of moving parts. There's a ton of stuff that goes right. There's a ton of stuff that goes wrong throughout the process. And then the customer never knows. That's a huge win.
Yeah.
I mean, everybody has been super professional and done a really good job. And it's a ton of fun. And it's kind of like everybody's high-fiving. And sure, we all do it to support our family.
Yeah.
I mean, we all have to, all have to make a living. But when you're able to do that thing as well and provide that product for the customer that nobody knows about, I like that.
Yeah, that's good. That's good.
So what are the biggest hiccups? Like what are issues that y'all have? What are reasons buyers can't buy, deals fall through because of financing? Like what are some of the major challenges that y'all are seeing? And is it any different than last year or 5 years ago, anything like that?
Well, I think ultimately right now, if we were honest, it's a different market, right?
Yeah.
So we're in a shifting market. It's not doom and gloom, but the reality of it is the market, if you will, is down 15 to 20%, right? And so you have to understand that. You have to know that. Versus a year ago, you could put a sign in the yard. You might have 5 people waiting to bid on that same property, paying over the asking price. And so now that was a seller's market. Now it's more of a buyer's market.
Yeah.
So from a complexity standpoint, we still, I think Doug and I would both agree, we still have buyers, right? And so now we're looking at it saying, okay, that inventory, where's that sweet spot of making sure that we can help those folks and we can get them to get the best deal. Because at the end of it all, we got to make sure that they're educated on the process, that they're truly getting a good deal, and that agent that's representing them understands, like he just talked about, we're all on the same team. We're trying to get to the same common goal to make sure that we can get that appreciation for that client. So in 3 years or 5 years, when they call us back or the agent back, hey, it was a huge win for everybody. So that's probably the biggest difference right now. I know a lot of the referral partners that we hear that we do business with, honestly, it takes you touching more to do about the same amount. So guess what? Every deal takes a lot of work.
Yeah.
We're not gonna, but you have to touch more to do effectively about the same of what you did in the past. From a agent standpoint, title company standpoint, mortgage guy, it's all the same thing. I heard this statistic last week. So year over year, from a real estate agent standpoint, you could touch 100 contacts, and the statistics show that you would close that person, you would close 1 out of 100. Now, same thing.
Yeah.
You have to touch 163 people to close that one deal. So from an agent standpoint, if we're not helping them be more effective, and they've got to touch 63 more people, which is very difficult to do, to close that same transaction, that's going to weed out a lot of folks in our industry, unfortunately, because there's only so many people to go around.
Right.
So it's making sure that we have that communication with our agents and our referral partners to say, hey, look, we understand your job stuff. We know you got to touch more. What can we do to help you be more effective and efficient?
It's interesting. And I do want to address the changing market. I hesitate to call it a down market because I don't necessarily see it as that. It's certainly going to be a shift.
Yeah.
And y'all see it, and I see it. I think there's probably less business, perhaps. I don't think it's significant, but I think it's less business. But there is more inventory, let's put it that way. So I think where people, and it's just a comfort level. I think people are used to doing business a certain way. I mean, when you look particularly at our area, but even nationally, statewide, regionally, whatever, we've had a low inventory for a while, and now we're shifting, I would argue, even more to a neutral market. I'm not even going to say it's a buyer's market. I would say it's a lot more neutral. So it's just the level of thinking is going to be a little bit different. So how do you, given the fact that there's less transactions, how have y'all adjusted to that?
I think it's a good question. So I just to kind of piggyback on what you said and what you said. So, and I'm always the guy that never sees the the half full or cups running over. So my thought to that is like, how are these things gauged and these statistics gauged? Means when we want to say if we're in a, if we're in a changing market or if we're in a buyer's market, aren't we always in a buyer's market in November, December, January, and February?
Yeah.
Like in my opinion, so I always feel like it's seasonal, and I talk with a lot of people in real estate, just like all you guys do every day, and it's the same. We have the same conversations today, or that we were having that I was having in January of 2019. I was having the same conversations in January of 2016. Of like, man, I'm just not getting a lot of my phone's not ringing a whole bunch, and we're all like, it's almost like I'm scrambling and I'm nervous, in April through November because I'm so busy I can't see straight, or then I'm scrambling, I'm nervous because we're trying to figure out how to get busy again. But I think as far as trying to stay busy, like Ryan said, you have to touch more people, make yourself more available, and I think the more as we continue to do the right thing for the right reasons, it just seems to kind of happen. But that's a question I have, a question that I have for you, or a question I have for you. Like, is it really because we can't look at all the statistics from the national standpoint, because South Louisiana has always been in a strange bubble to me.
Yes.
With the refineries, with construction, with the Mississippi River, always kind of had a little bit of we may not have ever had that huge
We don't swing too far.
10% in gain unless we have a natural disaster, but we never have that super bad crashing market. But I'm always curious: is it really just kind of a time of the year things are a little bit slower? I know that Ryan had record January and Februarys from what he did last year and the year before. I know that we had great January and Februarys from what we have over the past. So, but I was just curious, like.
Well, that's what I want to get at. Is I think yes, there's a changing market, and I don't think that's a bad thing. I actually think that's very healthy. That's supposed to happen, and I think what's been happening in a low inventory sense is, to some degree, agents have gotten lazy. And if I list a house, I'm used to listing a house, and buyers come, and then that's that. Well, now listing agents are going, well, wait a second, now I have to compete. Now I got to work a little bit harder, particularly, and one of the things that I've been tracking is the price points. And you sort of look at, a $1 million house is obviously going to sit a little bit longer than something less. Well, I've been looking at the inventory, kind of an 18-month inventory, and look at where that cap is. And it starts at, $550, and then it went down to $5, and then it's at $450. I mean, and then that price point keeps getting lower and lower as those houses keep staying on the market longer and longer. And by longer, that's not a bad thing. Again, that creates a healthy market. But you have listing agents that now have to go, holy man, I'm having to reevaluate. And when you look at past data, particularly in the capital region, the last time there was a buyer's market was what? '03. I mean, you had Katrina in '05, so that changed things. Then during what everyone else would consider the bad time, Baton Rouge never really experienced a lot of that, just because of Katrina and the Katrina effect and that sort of thing. And then so then you get where we had a low inventory here. Then when things were supposed to change, you had the flood, and now we're kind of creating that as well. I mean, you go 60 miles, down the road in Lafayette. That's a buyer's market, folks.
Yeah.
I mean, that's a whole different ballgame. You go down to Homa, I'll be there next week. They got a whole different market. So it's really interesting that Baton Rouge has been insulated for a lot of this. I think it's pretty neat. But part of the reason I didn't prep you as to what we were going to talk about is I wanted y'all to kind of give me some answers. Is yes, the market has shifted. You had a record month. You had a great January and February. What do you attribute that to? What's the cause of that? Because I think that's what's interesting to me is I get calls from certain people that saying, I had a conversation in the grocery store with an agent 2 weeks ago that was like, I've been in the business since '05, and I'm thinking about getting out of the business. I don't know if I need to go get a job. And then 30 minutes later, I get a phone call from somebody that's going, I had the best month of my career.
Yeah.
So what is it that you attribute that to? What do you think it is for y'all?
I'm a numbers guy. I ran the numbers, let's see, for January and February, and loan. So we did more loans in January and February than we've ever done, and our average loan amount is right around 189 or 190,000.
Okay.
In 2018, our average loan amount was 229,000. So as you can see, 229 to 290, right, with some highs and lows in there. So again, I can't tell you if that's attributed to just being that time of the year and that people start listing their houses in October, November. They don't sell by December. They don't sell by January. The fire alarm goes off. The agent says we need to keep. We're doing 3 or 4 price reductions. Then it sells. Then you flip the script and the opposite happens in April. You had mentioned the same referral partners that we work with are the same ones that are continuing to do the business, over and over again. They might just be working with a little different clientele now. Now they're working with that first-time home buyer, where they were working at that person that was selling and buying their third home in April, May, and June. So as far as like the recipe to it, I mean, the people that work hard and put the effort in and are doing it for the right reasons, they're going to be busy, they're going to have transactions, and they're going to, if they touch enough people, they're going to.
So the fruits today were sown
many
months,
months,
years, that sort of thing.
Oh yeah.
And I think I think the other thing that we got to all it's a reality. August of 2016 really did change our market. Because at that particular point in time, I still think we probably rode about a year and a half of I have to buy, I don't have an opportunity. We had programs that came out to where the 203Ks where you were doing like 100% if you currently had a house. So that kind of died down, but you had a lot of transactions that happened through that period of time to where if you were just in the business, just sheer numbers were, I'm going to do business. Think about how many people flooded in Livingston and Ascension and Central. I mean, that's a huge, so I think you had a little bit of a I'm going to call it a flood hangover. And so a lot of those folks that were like, wow, this thing is really super easy, maybe got the wrong impression. Doug and I's pipeline is we're always stressed out saying, oh my gosh, right now, honestly, March better be booked and you're working on the next, because what we do today in the buyer cycle on a purchase is not going to come to fruition for another 60 to 90 days. So it is a much longer buying process, and so you have to have a lot, like we talked about earlier, you got to have a lot more in the pipeline, and unfortunately nobody likes to say that, but that's the reality. Because a new construction that just started today, guess what, we got 4 to 6 months before that even happens. So I think you see that, and I think our market too, if you started looking and just kind of removing ourselves and saying, gosh, look at all the new construction that's really going on. So if you bought a house in a subdivision and there's 500 or 600 houses in there, and you're trying to sell at the front, and they got brand new construction in the back, who are you competing against?
Yeah.
I'm going to buy this new construction, and I'm probably not going to buy this house up in the front. That's just a reality of kind of where we are, and it's different than I think what we've ever seen.
Not for the same price.
Not for the same price. Yeah. That's right.
So price cures it all.
I will say this, which was kind of interesting. You know, starting around October, November-ish, you know, we were like we all agree, we were in a market where, you know, when we took an application and pre-approved a client, within a couple of weeks we were getting a purchase agreement.
Yeah.
I mean, there was the exception, but if, you know, we had 10 lendable customers, 8 or 9 of them were writing purchase agreements within the next 2 weeks. And starting probably about October, those customers were kind of hanging around for 90, 120 days.
That's interesting.
You know,
I never thought about it that way.
Before they were pulling the trigger. Just here over the last probably 2 or 3 weeks, it's been we've had some bang action, meaning like we pre-approved 3 this week and have gotten purchase agreements on them already. And today's Wednesday the 6th.
Yeah.
So just here within the last couple of weeks, I've seen that pick up.
I never really thought about that. From the time that they call you to get pre-approved to the time a purchase agreement comes in. Yeah, I love that number.
And that's when Ryan talks about bringing value to our real estate agents. You know, those are things that, you know, we brainstorm and talk about that I can share with them openly. Like, here's kind of what I see. You know, I get calls all throughout the week like, hey, what's the market doing on your end, and that kind of stuff. And that's kind of part of the whole team concept and working together.
Yeah, that's good.
We'll wrap up here in a second, but I want to address the touches. Y'all both mentioned it several times. What does that mean to you? Like, when you say we have to touch 163 people, like, define that for me.
Well, to me, a touch is that it's really simple. It's 3 things. Did we ask them about buying, selling, or investing in real estate? That's a true touch to me.
Ask who?
The client,
okay,
or the referral partner, or the builder, the CPA, whoever. So a lot of times, I think in our industry, we get very small-minded, and Doug said it, you've said it, at all facets of the market. As long as I've been doing this 18 years, people are always going to buy or refinance a house. That's a fact. So a lot of times we get one-sided on our mind of not asking you, hey, look, who do you know, Brent, that I need to know that's looking to buy, sell, or invest in real estate? And guess what? If I do a good job and you like me and you trust me, eventually, and I continue to ask that question, you're probably going to give me a name or two that I can make a connection and touch another person, which, again, that goes to the whole pipeline method of most people get a couple in their pipeline and they think, oh gosh, I got it, and 1 or 2 falls out, and you close one and you had a bad month, and then you go 3 months in the business and you're like, I'm out because this mortgage thing and this real estate thing is terrible.
Yeah.
So we've understood in both of our careers that you have to go wide.
Yeah.
And you have to ask the right questions. And so that's what he's a master at asking the right questions.
Yeah.
Doug will ask enough questions to get that person to say, you know what? I like him, I trust him. I've heard about him. He's got a great reputation around town, and I'm going to give him a shot. You know, and so, but most people go so small to where at the end of it all, you're just not going to touch enough people to get you the result that you want. And that's what we help do. We started back in October, November, I know when we had our CE event, sat down with a lot of our referral partners, did business planning. What does that look like? So if you tell me you want to close 40 transactions for the year, but you have no idea, no plan in place on how you're going to get those 40 transactions, and nobody to hold you accountable, guess what? You're not going to hit those 40 transactions. But if we partner with you and we develop that rapport and relationship and we make it a game and let's figure out how we can get you on track, then hopefully we can get enough business for both of us to make a win-win situation.
Do you plan out like these conversations? Are they pre-planned? Do you have a list every day, or how do you organize that? I know we're getting 2 different answers.
So you're gonna get 2 different answers.
That's what I want. Yeah.
So list, like honestly, this was my list this morning. So I'm a list guy, right? So but I'm a
this was my list.
Yeah, that's right. So he doesn't need a list.
There's no one and that's the whole point of this. So what's your process?
I'm a process-oriented guy, so I have what we call theme days.
Okay.
And so I know each and every day before I show up to the office what my team as well as myself that's what we're gonna do. Wow. That's what we're gonna do. And by the grace of God, that's happened for a long period of time. He talked about
how many a day do you like to
I will touch
reach out to?
I will touch easy 40 to 60 a day. My goal is to touch at least 100 per week. And so if we do that effectively, I believe.
So is that phone calls?
Yeah, it's phone calls, face-to-face meetings, whatever. But each day has a theme day, and we track that. So
give me an example of a theme day.
So a theme day, Thursdays will be past clients.
Okay.
So my goal on a Thursday is to, like we talked about, if you and I are in a relationship and we're doing business together, and Doug's the client, and you know, Brent, that I'm calling your past client, my past client on Thursdays, and keeping up with them. How are the kids? What's going on? Have you gotten any information about your market? Do you care?
Yeah.
Most of the people care, but they have nobody to reach out to them.
Right.
So if I call Brent and I say, Brent, hey, I had a conversation with Doug. Kids are doing great. They're on spring break. They're in Houston for the weekend. Why don't you reach out to him? He was asking me about some homes in his area. They were thinking about making a move maybe in the next 6 months to a year. That's a relationship. That's a value add. So that would be something that if you and I are in business together and you know what I'm doing on Thursdays, you're not calling me saying, hey, man, things are going, because I've got an accountability with you. Because I'm going to ask you to do the same thing. So that's kind of my process and what we do. I know Doug's has his own process, which is a little different.
What's your process?
You tell me. Everybody wants to know.
I don't have a process. I'm super blessed that I feel like I'm in the right spot. I don't really feel like we do anything special. We talk to a bunch of people all the time, and I love to. Ryan knows it, dude. I love to talk. I love to be on the phone with people. I love to help people. I love to brainstorm. I love to kind of business plan or talk through it. I like the client, I like the agents, I like the builders.
How many people would you say you touch in a day?
I have no idea. I couldn't even. I couldn't.
How do you start? I'm gonna find this. You have a process. You just don't know it yet.
I really don't know, and I really probably have no process. I don't know if I've come to this. If I've driven to work the same way twice.
Yeah. Do people call you, or do you call people?
Yeah, I think both. Like I feel like the people we work with, I'm super close with.
Yeah.
They might not feel the same way.
I
feel that way. I guess I could give you an example. So if I drove home and it was a 20-minute ride home, I might talk to one person on the ride home, or I might talk to 20 people on the ride home. I'm always on the telephone. I'm always talking to people. I'm always out and about with people. But I love that. Like that is not, and not saying Ryan doesn't love it. Ryan loves it, but Ryan likes to have a plan and process. Like he's taught me processes and checklists, and I wish I did better with that stuff. I think that there's a huge value. So we have some people on our team that do really good with checklists.
That's my point. And you've hired your process.
Yeah.
I did that in the beginning when it was just me. When we first started originating, or whenever I first started originating, I knew Ryan when he got me the job over there. I knew that he was the best, and they said success leaves footprints, and he wore a size 10 and I wore a 9 or maybe an 8.5. And so he did a checklist, so I did a checklist. I hated the checklist, but I knew the checklist led to being successful in business, and so I did that kind of stuff, and then thankfully, like I said, just blessed to where it's a job that I don't have to necessarily have that checklist, and we have some great people, Laura Tubby being one who's absolutely positively amazing, and she loves a checklist and holds me a little bit accountable to it. But I don't have a process.
That's it. Well, you do. You just don't like to call it a process. I mean, I think, and that's really what the point that I'm trying to is you've got success. Both of you have had enormous success, and both of you have gone about it two different ways. And I think that's kind of the point. That's one of the things that I try and share with everybody is there's no secret formula. Mm-hmm. Everybody has a different personality, and everybody has a different way that they go about doing those things. And I think you two are opposites in the sense that y'all kind of go about it a different way. But at the same time, what sort of the themes that I hear about this is consistency. Both of y'all are very consistent with how y'all go about doing it, and accountability. As both of y'all have some form of accountability that's in there. And I think sharing without there, I think that's kind of the piece that I think a lot of people miss is people don't like consistency.
Right.
They don't like it. They don't like patience. I mean, they don't like the fact that you have to build these relationships over time. You mentioned it. We got an immediate culture, so nobody really wants to. So the oddballs, believe it or not, are the ones that create a consistent culture, and that are patient enough to go, oh wow, this fruit's going to be delivered.
Yeah.
And at the same time, have that accountability, whether it's the accountability of a checklist or the accountability of Laura Tubby sitting outside your office, 6 feet outside of your door,
Yeah.
making sure that you do what you say you're going to do, which is important, and I think if people can develop those things, then I think that's where we are. Let me wrap up by talking about one different thing. Let's go back to the rates. So how does a rate increase affect a buyer, an agent, the market, that sort of thing?
First thing is it's mentality, right? And
Okay.
so the first thing that happens, man, it strikes fear in everybody. Rates are going up. What's the first thing? Everybody has a perceived notion of, gosh, that's not good. So what we always talk about is when you hear rate increases, that's not directly proportional to a mortgage rate increase. That's
Okay.
number one. So if rates go up a quarter, that doesn't mean substantially mortgage rates go up a quarter. So, but the consumer doesn't understand that. They just think rates just went up a quarter, so now I went from 4.25 to 4.5. If that was the case, that might mean on a $150,000, $180,000 loan, $8 to $10 a month, somewhere in there in your payment, maybe a little bit more. But at the end of it all, what we sit down and we talk about is here's where you are. You're paying rent at $1,000, $1,100, $1,200. Here's where you want to be. What's stopping you? What's that in between deal?
Right.
And what we always uncover is it's not a rate thing.
Yeah.
It's not a closing cost thing. The consumer is always conditioned to ask what's your rate and what's your closing cost. I know I was before I bought my first house because I don't know what else to ask. But let's sit down, let's figure out where that appreciation is. Let's show you those numbers and how it's going to work for you. Of course, nobody wants rates to go up.
Yeah.
But we also have to understand rates go up to curve inflation, which is going to help offset a lot of other things that go on.
Yeah.
And at the end of it all, it's not that big of a deal. I don't want to downplay it because I'm probably one of the most frugal guys that you'll ever meet.
Yeah.
But I know when I hear rates go up, even myself, it kind of strikes a little bit of fear if I was honest. It's not that big of a deal. Let's sit down and figure out where you are, where you want to go. If it's that big of a difference in your payment, it's probably not. And we have this conversation often. Today might not be your time to buy. Let's figure out in the next 3 months, 6 months, 9 months, 12 months where you want to be so we can put you in that right place on the right time. But it's not really, we talked about it, the average, over the last 40 years, 8.64% has been the average 30-year. We're down in the low fours.
Yeah.
Rates have been unbelievably low forever. But that's the first thing that the media, rates are going up, strikes fear. Guess what? The consumer mentally checks out for a few days, and then they come back into the market. That's just what we
say. That's what sells.
Yeah.
First house, I got a steal at 7.4%.
Yep.
It was awesome.
Ryan did my first loan, and I sat right next to him in a cube right next to him at 6.5%. Now, I was 6 months out of college, and all I gave him was a diploma.
Yeah, that's right.
And I got 100% finance and no down payment, 6.75 maybe, interest only.
Yeah, we had interest only.
Yeah, $200,000 house. My note was like $700. Yeah.
Oh, love it.
We've come.
So, what do agents? What do agents need to be tracking from a mortgage standpoint? Is it important that they track interest rates? Should they care?
I think it's important that they talk to us.
Okay.
I think it's important that they trust their lender and that they feel like we're knowledgeable in our industry and they can call and ask us questions about it. And look, I'm super transparent. I'm never gonna sugarcoat it. I'm gonna give you the optimistic point of view.
Yeah.
That's just kind of how I am. But I'll definitely give you the facts. But I think that they should call their lender.
Yeah. Is that it?
Yeah, that's it.
Well, thanks, guys. This was awesome.